BR in scope and issues in scope. First of all, what is BR and Article 9? First of all, what is BR? Definition. What exactly is business restructuring? Business restructuring definition. There is no precise definition of business restructuring as such. There is no precise definition that this is the definition and there cannot be any other definition. But for the purposes of TP aspects, this chapter does mention one definition that is given in the first paragraph 9.1. That says, and that's very concise, very short, and very. I feel it's short, but it's quite comprehensive in the sense it says that business restructuring is cross-border. BRS cross-border reorganization of commercial or financial relations between AEs. Cross-border reorganization of commercial or financial relations between AEs, including that includes termination of contracts or substantial renegotiation of existing arrangements. Cross-border reorganization of commercial or financial relations between associated enterprises, including termination of contracts and substantial renegotiation of existing arrangements. Fine. So you find that it's actually quite comprehensive. It contains three components: cross-border reorganization. So when we talk about what? When we talk about FFD getting converted into LRD, initially it was FFD, now it got converted into LRD. Fine. It might have transferred some of its functions to another entity. So cross-border reorganization of commercial or financial relations between AEs. Why? Because earlier, this is BR. Because earlier, pre-BR, FFD might have been transacting with a AE, right? This is the control transaction. Pre-BR, post-BR, FFD got converted into LRD. It might still be transacting with the same AE. But now because it is no longer FFD, it has been converted into LRD. That is why many things will change. Probably or definitely the transaction will also change. So cross-border reorganization of commercial or financial relation, that is transaction, that includes termination of contracts and substantial renegotiation of existing arrangements. So it is clear that when FFD gets converted into LRD and the transaction also changes, so the transaction would involve, the post-BR transaction would involve some sort of renegotiation between the entities which are involved in this cross-border reorganization, in this business restructuring exercise. Right? So cross-border reorganization of commercial and financial relation, including termination of contracts or substantial renegotiation of existing arrangements. Fine. So this is for the purposes of this chapter. This is the definition for business restructuring. I hope it is clear. Altaf, Charan, Jolly, Krigan and Sohail. Yes or no? Perfect. Okay. What sort of BR? So this is the definition. Now scope, when we are talking about what sort of or what types of business restructuring exercises or what varieties of business restructuring are we looking at? Okay. I've already given you two of the most widely discussed BR exercises, that is conversion of FFD into LRD and conversion of fully fledged manufacturer into low risk manufacturer. By this movement, I've already given you this movement. So you have FFD and that gets converted into LRD. So this movement, full-fledged distributor, full-fledged manufacturer, it is doing everything. Full-fledged manufacturer or full-fledged distributor, they are sourcing the raw material from the suppliers, they are designing the product, They are manufacturing the product, they design, they take care of the scheduling part, they take care of the volume of production, warehousing, storage, supply chain part, distribution part. They undertake all the rest, they control all the rest. They finally decide who, which jurisdiction they will sell. The entire series, supply chain, starting from the sourcing of raw material to the selling of the item. Full, that is why they are known as fully fledged, full risk distributor or manufacturer. Sometimes you can have fully FFD plus FFM. When they get converted into LRD, many of the functions of FFD or FFM, they are taken away. So FFD to LRD function also, because you would remember this is FR, function asset risk profile. So here the function asset risk profile is higher, here the function asset risk profile is lower. It means functions have been stripped off, stripping, removed, reduced, eliminated. Functions have been stripped off, risk have been stripped off, therefore. So FFD to LRD, FFM to LRM, these are two typical types of, two typical business restructuring, and these are known as function stripping. Function stripping, which also leads to a risk, which should lead to risk stripping as well. So this is function stripping, types of BR. Function stripping. Very common business restructuring exercise which are in the scope of this chapter. Function stripping. You can have centralization and decentralization. Remember that example in chapter number 1, last class we did. Chapter number 1 we had 4 classes. The 4th class towards the end, that centralization of procurement. Paragraph number 1.188, I think. 1.188. Centralization of procurement function. That you had what? You had number of group entities A, B, C, D, E, and they transferred their procurement function to a central procurement entity. And this negotiated on the behalf of these entities with the independent suppliers, and then entire thing happened. Remember this example? Altaf, Charan, Jolly, Krigan and Sohail. Yes or no? Altaf, Charan, Jolly, Krigan, Sohail. Remember this example? Yes. So you see A, B, C, D, they probably are located in all different countries. Country A, country B, country C, country D, country E. This centralized procurement entity to which they have transferred their procurement function to, this might be located in some other country. What is this? Centralization of the function. So they have centralized their procurement function into one entity. Centralization. The reverse can be decentralization. So already existing, you had a procurement entity. Yeah, hub services. So you had a procurement entity, centralized entity, and you decentralize. So meaning to say that you dissolve, you liquidate this procurement entity, because this is one M&E group. So you liquidate this, you dissolve this entity, and therefore you transfer the procurement function to all the individual entities. So centralization and decentralization. Second variety of business restructuring. Third variety can be centralization and decentralization of IP companies. So instead of procurement company, you have a IP company. IP company, intellectual property company for the entire group, intangible company for the entire group, which is taking care of the management of the group IP. Patents, trademarks, geographical indications, trade secrets, confidential information. This entity is taking care of it is managing the group IP companies. Very, very common. Again, centralization and then decentralization. Right? So function stripping, centralization, decentralization. Third type, you can have specialization and despecialization. A, B, C, D, E. Each of these entities, they do manufacturing also. They do manufacturing of all sorts of items. They do manufacturing of machines. They do manufacturing of vehicles. They do manufacturing of plastic items, etc., etc., etc. Now you want to specialize. So what you will do, you will transfer, you will say that the group will say that A will now henceforth, A will only manufacture machines. B henceforth will only manufacture the engines. C will only manufacture the wheels or shafts. specialization, despecialization. These are the different types of business restructuring which are in the scope of this chapter, which can be encountered in practice. Function stripping, FFD, LRD. You can also have LRD to FFD, but in most of the cases, FFD, LRD, FFM, and LRM. Centralization, decentralization, and specialization, despecialization. I hope it's clear to everyone. Altaf, Charan, Jolly, Cricket.